Hello everybody, sorry for the transition problem. Not really sure why it didn't transition over to me. It should have, but it didn't. It's nice to have you here. As you can see from the little thing in the bottom right corner, right over here, you can now call or text into the live broadcast. It comes through on my computer, it'll come up, I can answer your call, I can do all kinds of stuff. If you text me some questions or you text me and you just tell me that I'm doing a bad job, whatever it is you want to text me, totally fine. And if you want to call in, I just ask that you wait until the last 15 minutes or so of the show when we start taking some calls. Now, I'm not going to be dependent on your calls, so if you don't call, then it's not going to bum me out or anything. But I would like to hear from anyone who wants to talk. So if you want to use the little chat window in live stream or use the little chat window on YouTube or whatever it is you want to do, I'd like to hear from you during this broadcast. So today we're going to be, well, talking about Forex a lot. We'll also be talking about some robots, and we'll be looking at some market movement that we've had over the past few days. And gosh, there's a lot of cool stuff we're going to be doing today. We'll also be looking at a brand new indicator that's coming out. Yes, a brand new indicator. I mean, there's a lot of them that come out all the time. I understand. But let's go ahead and start by taking a look at the charts. So let's switch over to the charts. All right. So looking at the New Zealand dollar, US dollar, yesterday we placed a New Zealand dollar, US dollar trade. It was a buy trade. We placed right as the price was crossing the weekly pivot. And so far it's going okay. It hasn't gone up quite as much as I had hoped throughout this day, but, you know, whatever. I'm still just waiting for it to come up to its profit target. We had put the profit target up there at the top of the channel. Let me bring up that channel really quick. That will help us spot. Okay, I had put my profit target just up here below this spike. And I put my stop loss just down here below these previous lows. Now, could I have put my stop down here below this this previous trough? Yeah, we'll call it a trough. Yes, I could have put my stop down here below this trough, but I didn't. I didn't want to stay in that long. By the time it gets down there, it will already have felt like it's failed, and I will have wanted to get into a better position anyways. If it gets all the way down to this spike, or this trough down here, then I'll end up placing an additional buy trade after this one is stopped out. So the New Zealand dollar, US dollar is going pretty much how I figured. It's going to take a few days before this closes out one way or another. One of the things that I wanted to take a look at also is VantagePoint. Let me bring up VantagePoint real quick and take a look at some of the things that we've been seeing across the board. So with the New Zealand dollar, US dollar, one of the reasons why we have been, or why I've been looking at buy trades on this, is that the neural strength indicator on VantagePoint has been trending upward for the most part. I mean, you know, we have these little hiccups here and there, but we've been forming higher peaks and also higher lows. So I've been looking at a buy trade on the New Zealand dollar, US dollar. That's why I placed a buy trade yesterday. Now the British pound, US dollar, on the other hand, has been, I don't know, going against everything that I wanted it to do. I haven't placed a trade on the British pound US dollar yet because I've been waiting for an additional trough to open up on the British pound US dollar, when it has not. So we've been going down in price on the British pound US dollar. We've been going up in the neural strength indicator, but as you can see, we're also kind of rounding off, and that's not the most ideal situation when you're looking at divergence. So we're actually looking for a different type of entry signal, and we're also waiting for an actual trough to form in price, because right now we're just trending downward. Now granted, this chart looks a little bit awkward because it's well, it's stuck on the screen with this neural strength indicator. Let me zoom out a little bit and see if we can see this just a little bit better. Okay, so we are moving down in price, and the neural strength indicator still hasn't breached this previous low. Price has, but the neural strength indicator has not. So I'm waiting for either another trough to form with price, or for us to go down and actually breach this bottom level down here on the neural strength indicator before I start making any determinations about the British pound US dollar. Now let's talk about a few things that we have not talked about for a little while, like the US dollar Canadian dollar. The US dollar Canadian dollar is flat. It's that's a little bit odd for the US dollar Canadian dollar. Or at least in my experience, it's a little bit odd for the US dollar Canadian dollar. I've gotten stuck in US dollar Canadian dollar trades before that were very irritating and took a very long time to get out of. Let me bring it up on the regular TradingView chart, and it is actually trending upward at the moment. So if we take a look at, or not trending upward, but it's we're in a bullish candle at the moment. Let me take all of these drawing tools off of here. There we go. So we can actually just see the price action. We've breached past this channel, the Trader GPS ATR channel thing. We've breached past it going upward, but in my experience, whenever we breach past this this channel, we're just looking to go up to one of these peaks. We have a peak that's just right above where we just saw the US dollar Canadian dollar trying to reach. We may be able to see it get up to the top of this channel, the top of this this peak right here, but I don't know, more counting on it turning back around a little bit. But again, right now, there's not really anything to look at on the US dollar Canadian dollar because we are flat. We're in this nice little flag pattern, or whatever you want to call this. It's not really anything. It's just sitting here in this little channel. So we're not looking to do anything on the US dollar Canadian dollar yet. However, when we go back over to our, there we go. Sweet, someone just liked the broadcast. Awesome. Okay, if we go back over to VantagePoint, we're going to take a look at the US dollar Canadian dollar, and we want to see what direction the neural strength indicator is saying that we should be going in versus where we are actually going. Because right now we're in this channel, right? We're not moving really at all. So where does the neural strength indicator say that we're going? Well, we've been doing some really strange things with the neural strength indicator. We've been going from this high, which actually was not a high compared to the high that was over here. It's actually going lower. We're going lower. We went higher on the neural strength indicator from here to here, but we went lower in price. And that's not really divergence. We're not looking at, you don't look at, you know, a lower top for divergence, but just looking at this and seeing how the neural strength indicator is going downward and price is pretty much staying the same. That's one of the reasons why I'm more or less looking for a sell trade to open up on the US dollar Canadian dollar. However, when we decide where to put our sell trade, we actually want to be looking at our little peaks and troughs over here. As you can see, we had formed this peak right here. Let me zoom into that really quick. By the way, I really love the Apple Magic Trackpad. It's pretty much the only reason I bought this Mac Mini, other than I needed something to show charts on during the broadcast. But I bought this little Mac Mini just so I could use this really cool trackpad. So if you have an Apple, a Mac of any kind, then you should get this trackpad. It's pretty cool. But anyways, we formed a peak here. And granted, this peak and this peak, these two peaks right here, don't actually look very similar, other than that they are both, you know, they look like little mountains. But they, the price looks considerably different, right? Well, until we consider the fact that we made this peak and then price on these two candles here couldn't break through that peak. And that's more or less what we're seeing across the board with this ATR indicator, is that when we have formed peaks and valleys, price has a difficult time breaking past those points. So let me back up just a little bit. We can take a look at this. As you can see, we've got this peak right here, or sorry, this trough. We've valley. I'm just going to keep calling it valley because peak and valley just makes more sense to me. We've got this little valley right here, right? And then when we come down here and we start touching it with price, price actually hesitates. Even though we are kind of in the middle of this big move right here, it doesn't look very big, but considering this is a daily chart, this was 25.52, 2,900. That's a 350 pip move just in these few days. But when we came down to this valley, or this trough right here, we actually hesitated in the market before we actually went back down. So that's what we're looking at right now. I'm looking at us coming up to this peak and then turning back around. Now, maybe that's not a complete turnaround. Maybe it's not a continuation of the trend that we've been seeing, but I am expecting a nice little sell trade bouncing off of this peak. And this peak is at 29.47. So once we reach this, I'm going to be placing a very small sell trade on the US dollar, Canadian dollar. Plus, we're reaching some highs that we haven't actually been at since all the way back in June of last year. And in June of last year, you can see we were not going up. And we're headed into June now, so we'll be looking at it's not going to mirror what happened last June, but we could be expecting a little bit more of a movement than we've been seeing. So if we go back just a little tiny bit, just a little bit further, in May, this is just perfect. In May, at the end of May, we had this little channel forming where it wasn't doing anything for a couple of weeks. And then finally we broke down through. Not only did we break down through this valley here, or this trough, oh gosh, this is really interesting. Look at this. Let me back up. Okay, so maybe the trackpad is not the best way to look at charts. All right, now we're going to zoom way in here. Okay, here is our little valley. Here's our little trough right here, right? When we came down to it, we actually ended this trading day at that trough. I mean, to the pip even. We ended the trading day on that trough. And then when we opened up on the next trading day, we just dropped like a rock. And we hesitated a little bit, came back up, and again, we ended the trading day at that previous trough. That same previous trough that we had ended the trading day on just a week earlier. We ended this trading day on that same trough, and then we just dropped again. And then we just kept going. Man, we haven't been back up to there ever since. So let's go ahead and zoom back out again. Now, for those of you who, I don't know, trade robots and such, this actually was a very, very bad time for some of our robots. I won't mention any of the ones done by other educators, but I know that one of my robots in particular, the moving average divergence robot, actually took the trade on this one, on the US dollar, Canadian dollar. I think it took it like here. It took a buy trade somewhere in here, and it did not go well. It just went against me for quite a while until I was able to place an additional trade down here, and eventually when it came back up, I actually got out of that in a little bit of profit, but not much. That was a very bad time for me, especially. I didn't enjoy it. I don't know if anybody else did, but if somebody else was able to catch that, had I been doing this type of analysis, had I had these indicators that I've got right now, I probably would not have gotten into that US dollar, Canadian dollar trade because, I mean, for all intents and purposes, it didn't look very good. Or at least I would have had a stop loss on it. Now, when you are trading using this ATR thing, and you're trading off of these peaks and valleys and such, you're actually using these as a starting place, and as a profit target, and as a stop loss. So if we were looking to place a buy trade on the US dollar, Canadian dollar, we would probably look to place a buy trade somewhere above this peak, and we would probably only want to buy up until we hit this peak. And granted, that's not a whole lot of pips. That's going from 29.50 up to 3,000 even. So about 50 pips. We would only be looking to make about 50 pips on that. And our stop loss would be down here below this previous trough. Now, that's not the only way to trade this system. I would be looking to actually place a trade in the opposite direction of this peak right here. Primarily because we're looking at a downward sloped kind of a market at the moment. We're going from these highs, from previous highs, we're still going downward. And we follow this like a trend line, which I may not be the biggest fan of trend lines, but at the same time, it does help us to visualize some of what's going on in the market. So if we were to put a trend line going from here down to here, then we have touched that trend line and are potentially just bouncing off of that trend line. So I'd be looking to either close beyond this peak up here and buy going upward, or sell off of the bounce. But we'll talk more about that as we go along. Odds are this is not a trade that will be opening up today. So let's go ahead and move on to an additional currency pair. Let me go back to VantagePoint, and also let me check text messages and make sure I'm not missing anyone here. Nope, we look good. Awesome. All right, VantagePoint. Let's head over to the US dollar Swiss franc. This was on the currencies watch list for last week. And if you remember last week, I had released the currencies watch list, and the US dollar Swiss franc was a sell trade that I was looking at. So let me head over to back over here to the US dollar Swiss franc. Let me get that. I want to come up. There we go. All right. US dollar Swiss franc. Let me bring that up so that you can see it as well. US dollar Swiss franc. Even though we have this whole this whole section of greens going here, which was a very nice buy setup, by the way, we still have some of those greens going on, but it feels like we're rounding it off just a little bit. This was a sell trade because of the divergence that was happening as we were going up. The VantagePoint neural index, neural strength indicator, whatever you want to call it, was actually going down. And we placed a sell trade on, at least I placed a sell trade on the 21st, because not only did we have divergence, I waited until that night, but we also closed just below this previous low body close, which you can see right here was also a little hesitation in the market. So once we closed down below that, then I placed a sell trade, and I was in that sell trade for only a day. I didn't want to stick around in that sell trade very long, especially once we consider we have printed another trough. See this nice little trough right here? Well, we printed that trough, and now today, even though we've gone down to that trough, we were not able to break it today. Now, if we end up breaking it and closing beyond it, not only will we have closed beyond this trough, but we will have also closed beyond another market hesitation right here. If we close beyond both of those, then we can look for a nice sell trade. If we keep bouncing off of it, then we might be able to expect a little bit more of a buy trade. And that is going to depend primarily on some of the divergence that we've been looking at. So if we look at the US dollar Swiss franc, we were going up in the market as the neural strength indicator was going down in the market. Now, if we're able to actually print a higher low with a lower price, then we can start looking for a buy trade. But all indications kind of more or less point to a downward trend of the US dollar Swiss franc at the moment. Now, when I say the word trend, I don't mean a long-lasting trend. I actually just mean, a few days of market movement. And that would probably be a better way to phrase this so that I don't confuse anyone. But we would be looking for a few days of lower market movement, especially if we manage to close beyond this trough. It's US dollar Swiss franc. Nice sell trade at the beginning of the week. I probably wouldn't highly recommend it at the moment, even though all indications are more or less pointing in a downward direction. Okay, why don't we head on to another one? Let's look at the Euro US dollar, because, well, I love looking at the Euro US dollar because it's my nice vanilla currency pair. And let me bring this up on VantagePoint so we can see what it's doing there first. This is more or less the way that I do my own analysis. Whenever I'm looking at the market, first I go to VantagePoint. I don't go to VantagePoint because I feel like it's the end-all be-all of everything. I go to VantagePoint because it gives me a better sense of where the market is going, where it's been, and then I turn to my own indicators, which are over on TradingView. So VantagePoint, the neural indicator, the neural strength indicator, we were looking at this as a nice buy-side divergence move, and that worked out kind of right here, which was like 2 weeks ago almost. And we had a nice buy trade in here in this little range, but now we're moving beyond that and we're no longer showing divergence. Now, if we are able to print another candle moving upward, and then we have actually in price a candle moving upward, then we'll be looking at another divergence move. Now, we don't trade based only on divergence because that is not a smart plan. We always want to have multiple entries or multiple, entry signals. Yeah, we always want to have multiple entry signals before we actually commit to a trade. Now, for this, we've got this Rsi Overlay down here at the bottom that I've been using for a while as well. It's showing still in downward movement. However, we're also having divergence in that. See, we have this nice little trough right here. Then we have this nice little trough right here. And that's higher, but price is lower. And right now we're printing, it looks like it's going to be a buy candle on, or a bullish candle. Wow. There's a lot of B's going on in the market. We're going to be printing a bullish candle by the end of today, which if we remember, or if we take a look over at VantagePoint again, I'm sorry for switching charts so often. If we take a look at VantagePoint again, remember, if we are able to print higher on the neural strength indicator and price is printing lower, which at the moment it looks like it's going to be doing exactly that, then we will be looking at divergence. So we have a nice possible divergence play coming up on the Euro US dollar. And we'll talk more about that tomorrow. It will probably be on the currencies watch list for this weekend because I can't imagine anything playing out on a Friday that I would want to get into really quickly. Anything can happen between a Friday and a Monday. And I'd hate for any of us to get stuck in a buy-side trade on a bearish market. So the Euro US dollar is probably going to be looking good by Monday or so for a trade. Now let's look at the US dollar Japanese yen. If you've been following the live broadcast, you'll remember that Gordon has been talking more and more about the carry trade and that the US dollar Japanese yen is actually the carry trade for right now. And you know, as difficult as it is for me to grasp some of these concepts, the carry trade to me is actually, I don't know, it's pretty, I'm just going to say interesting, even though that's the worst word in the world to use for something like this. But the carry trade is interesting to me because we've been following things like the spread and what it has to do with supply and demand and all those cool things. And we'll have more information about that type of stuff later. But for right now, just remember, the carry trade is US dollar Japanese yen at the moment. So we're going to be looking at some divergence with that, as well as some supply and demand. So let's go back over to VantagePoint, and we'll take a look at how the neural strength indicator is doing on that particular currency pair. And then we'll head over to TradingView, and we'll see what the charts are doing. So if we look at the US dollar Japanese yen, which is just awesome, but at the same time, we're not looking at very much in the way of divergence. Divergence, in case you're not necessarily familiar with it, we're looking for higher lows printing and lower lows printing in price. Or alternatively, we're looking for lower highs printing and higher highs printing in price. So basically, price is going higher while the whatever indicator it is that we're using is going lower, which we did have that for quite a while. We had the neural strength indicator that was going downward, and this is why I believe the US dollar Japanese yen was on the currency's watch list. If it wasn't, then it really should have been. But the US dollar Japanese yen was highly divergent. You know what? I bet it was. It had to have been, right? Anyways, the US dollar Japanese yen was going higher in price, but it was going lower on the neural strength indicator. And now, as you can see, we finally hit that big drop that we had been waiting for. Now let's see what it does in price. Oh yeah. Oh, that is good. Look at this. Oh, I need to switch to the other mouse. There we go. All right, so we were going higher in price, lower on the neural strength indicator, and then we had these two massively bearish candles. Now, as you can see, really quick before we move on too far, take a look at some of these previous troughs. This one right here we could consider a trough because it is a down and then immediately back up. It's come down to just about where this trough was, or at least where price was at this trough, and now it's bounced slightly. Now, since this wasn't actually a very strong trough, we're not actually going to base any type of trading off of it, but it is interesting to see where price ends up going. I mean, take a look at this. We're about to end our trading day at this trough. How fantastic is that? Trading trough to trough is also another way to do this. This indicator, this ATR thing that we built, which, by the way, has nothing to do with the ATR. We only named it that because it was, I don't know, similar in concept, but it actually is completely different as far as formulas and everything go. But this is a fairly new indicator. We just built this a couple of weeks ago, and we built it, and then we tested it out during a live broadcast, and it ended up just being really cool. So we've been using it kind of ever since, and back testing it and going with all kinds of cool stuff. But anyways, we had this peak right here, and gosh, let's go back to this peak. We've got this peak, price comes up, doesn't quite touch it, but it creates its own little peak. Then we come back up, still can't quite touch these peaks, and then we come back up and we close on this peak. How cool is that? If you don't think it's cool, then that's totally fine, but I think it's cool. Then we were actually able to go above it. But we only went above it for a very brief period of time, probably because we were so divergent. We were only able to go above this peak for a very brief period of time, just a few days, and then we just tanked horribly, which actually was pretty good for us because we were looking at a sell trade on the US dollar Japanese yen anyways. Now we have our RSI overlay down here is actually transitioning back to a buy signal, but it's going to be quite a while before it transitions back to a full buy signal. Now, where is the US dollar Japanese yen going beyond that? We want to zoom out so we can see what the overall. Oh yeah, the US dollar Japanese yen is just all over the place, pretty much all the time. So saying that it's generally going in one direction would be not very good analysis on my part. But for right now, we're just looking at very brief movements. And that's what I like about looking at the daily charts, that we can just plan out a day in advance. We don't have to plan out 15 minutes in advance or 10 minutes in advance, or we don't have to plan out each hour. We can just plan out a day. And for right now, our selling of the US dollar Japanese yen is pretty much done. I'm complete on the US dollar Japanese yen. Now let's go ahead and head back over to VantagePoint really quickly. And if you want me to look at something in particular, we can look at more than just Forex. We don't have to just look at Forex. Remember, we also have access to all kinds of stock information, options, and other stuff. I mean, on VantagePoint even, let's take a look at VantagePoint, all the stuff that we've got. I'll show you everything that we've got in VantagePoint to look at, and hopefully next week, or sorry, tomorrow, or next week, or whatever, even today, we can hear from some people about what you would like us to show. Because if we're just going to show the markets that we're just going to show, then we can't necessarily help you in your own trading. Because we'll just be looking at our own setups and at our own, I don't know, favorite instruments to look at. Let me go back to the start page and... Oh, that's irritating. Where is that? Gotta bring this up. Oh, there we go. Futures, Forex, ETFs, US stocks, and Canada stocks. I mean, we got a lot of stuff going on here. We can even look at cannabis stocks, basic materials, capital goods. I mean, I've got pretty much anything you can think of on here. So if there's something that you want to look at on here, on VantagePoint, then let me know so that I can look it up and we can get a nice interactive session going here, because although this is a live broadcast, we don't have any problems with showing other things or with communicating with you during this broadcast. So if you text us, or if you call us, or if you want to just chat in the little chat bubble on live stream or on YouTube, or whatever it is you want to do to communicate with us what it is you'd like to see, you can even email us and send us an email with your questions or with some things that you'd like to see. Now, I bring this up because we want to make this broadcast as awesome as possible. We want to make it as interesting for you as possible. And even if that means that one of us as the hosts or presenters or whatever else has to take a step back so that you can see more of the people that you want to see. Like if you want to see more of Gordon or if you want to see more of Scott Cook, let us know, because we'll bring them on more often. Gordon is usually here as a regular host, but the past couple of days he's had some other things going on, so he wasn't able to be here live. But I'm sure that he's watching wherever he is. Hey, Gordon. Well, we want to know what it is that you want to see more of, because we want you to be able to come to this expecting to get something of value out of it. We don't want you just to think that you've got to come and watch us talk about what we think is the best trading situation. We want to help you in your own trading. So if you're stuck in a trade, or if you're thinking about trading this or that or whatever it is, you can ask us about it. Ask us in this chat box, ask us via text message, ask us by calling in, and we'll give it our best effort to help you in any way that we can. Sorry, voice got a little bit trailed off there. Okay, since I haven't heard from anyone at the moment, let me go ahead and switch back over to our charts. Now let me also bring up something really quick. I'm going to bring up the chat area in live stream, just so that I know what's going on everywhere, because I seriously would like to hear from anyone that would like to talk. Otherwise, we'll just keep going with Forex. I'm going to turn that off, and there we go. Okay, cool. Drag that to that screen, actually. All right. Now let's continue our Forex review. All right, Forex. We were just talking about the US dollar Japanese yen and how we placed a sell trade at the beginning of the week, and it actually turned out pretty well. Let's go ahead and jump to the, there we go, Euro New Zealand dollar. That's what I wanted to look at. The Euro New Zealand dollar. All right, now I may not be able to tell you the significance of the Euro New Zealand dollar, but I can tell you that I really enjoy trading the Euro New Zealand dollar. So let me go ahead and bring that up on VantagePoint. We'll take a look. There we go. All right, VantagePoint, Euro New Zealand dollar. All right, the Euro New Zealand dollar. We had lower highs printing on the VantagePoint Neural Strength Indicator. We had lower highs printing there, but we had higher highs printing in price. So that actually created this nice little sell divergence setup, especially with our really cool doji right here at the top. After this doji, that's when we especially started looking at the Euro New Zealand dollar for a sell setup. And that may not have been during the live broadcast, but it was definitely part of one of the Trader Continuum webinars. So now we're printing lower lows in price, but we're leveling out on the neural strength indicator, the neural index strength, neural strength, whatever it is. We're leveling out on this indicator, although it is still a little bit lower. It's not quite as much lower as what we have seen already. I mean, we went from this high all the way down to here, but we only barely went across, did a, what do you call this, a transverse movement? A sideways move, whatever. Anyways, we just went right across as far as the indicator is concerned. So if we go back and we take a look at the Euro New Zealand dollar, we're kind of seeing that same thing happening right here. Take a look at this. This Euro New Zealand dollar candle which just started up yesterday. Well, okay, it's just ending is what I meant. It's just ending now, and we don't have very much movement right here. This whole day was a nice big movement, but this shows a whole lot of hesitation in the market. And not only that, but we already had hesitation. We had this hesitation right here because of these little troughs that we had. So we had these troughs, then there was hesitation right there at that trough. We blew down past it really quickly, and now we may be looking at an opportunity coming up very soon to buy the Euro New Zealand dollar to go back up just a little bit. Now, I don't make a whole lot of speculations about long-term market movement because I feel like there are too many ways that we can make incorrect assumptions about the market if we're looking for really far in advance types of signals. However, we are still printing buy-side little arrow thingies. It's called the Trader GPS trend indicator that I built. We're still seeing these buy-side arrows even though we are moving downward in price. And as you can also see, these troughs are not really getting much lower. So we may be looking at a nice buy-side trade. Also, at the same time, the Euro US dollar will be having a buy-side trade. So granted, these don't look very similar, and they're probably not very correlated at all at the moment. However, we're looking at just about the same type of setup happening across both of them. So they may be trying to correlate here very soon. So if you're running robots on both the Euro US dollar and the Euro New Zealand dollar, as I am, you may want to shut down one of them for the next several days or so, just in case we end up correlating in a bad direction. Because if we get correlated in a bad direction and we start placing trades and our robots start getting into some trades on the sell side, but we're buying, or on the buy side and we're selling, then we could end up seeing some very disastrous consequences from that. Or at the very least, we may end up seeing some drawdown that we just really don't want to have right now. I mean, when do we ever want drawdown, right? Now, if we end up on the Euro New Zealand dollar, let me zoom back in just a little bit. There we go. If we end up printing higher on this next candle, then we may expect that a buy setup is going to be happening sooner rather than later. Because if we look back over here, we had a trough and we had a higher trough and then a still higher trough. It didn't actually break this lower one down here, and then we had a nice buy side trade. Well, that's the same kind of thing we may be looking at coming up pretty soon. Another buy side trade once we print another trough that's higher than this one. So we may be looking at a nice trade on Monday for the Euro New Zealand dollar. Okay, let's head back over to VantagePoint so that we can take a look at a couple of additional currency pairs. And you know what? Nobody is actually telling me what they want to see. So I'm just going to start making some things up. I'm going to start looking at some of the US stocks. And rather than trying to figure out which one they are in, let's search for GE. GE, right? Yeah. Not orange juice. Wow. Okay, so apparently that leaves a little bit to be desired. Instead, let's look up 3M. There, we have a 3M. Sweet. Okay, 3M. And now I'm mainly looking up stocks that we've talked about in this broadcast before because I don't do a lot of stock trading. Now, I've been learning a lot about stocks from Gordon, and I've been doing analysis on stocks for quite some time. But I haven't actually done a whole lot of trading in stocks. So I'm just going by the stocks that Gordon has mentioned several times during our broadcasts. And actually, if I close out of VantagePoint and then bring it back up again, let's see, then it will load the new day's candle, I think. I hope. Okay. Now we've got 3M. Did it load the new day's candle? Nope. Okay, well, whatever. Not a big deal. I actually don't see anything on 3M. Maybe Gordon would have a different type of analysis than I do. Well, shoot. That's kind of cool. We went from here, we went lower, but the neural strength indicator went up. Then we went down. We've created a new trough, which is considerably higher on here, but is the same on here. So I don't know, maybe we're looking at a nice buy-side divergence setting up on 3M. I have no idea though, and I'd rather not speculate too much. So let's go ahead and turn back over to our Thomson Reuters terminal so that we can look up some more information specific to 3M. Launching. Really? Launching? I already launched this thing. There we go. Okay. Let's look up news related to 3M. 3M, public company. Sweet. Order imbalance, shares on sell side. Well, there you go. Regional says court issued opinion in previously disclosed litigation filed by CEOs. ALJ reaffirms guidance range for full fiscal year. Wow, that's a lot of boring stuff. Okay, I don't care about any of that stuff. But the New York Stock Exchange order imbalance, 3M, shares on the sell side. That's kind of cool to know. All right. Order imbalance, shares on the sell side. Whatever that means, we will move on now back to some currencies, and then we will try looking at some stocks again if anyone has actually brought up any stocks that they'd like to look at. Now the British pound Swiss franc, the pound Swiss. This particular currency pair is just about the same type of volatility you expect on the pound yen, or at least it's a more predictable version, I think, of the pound yen. I like the pound Swiss. Some people don't like the pound Swiss. Some people feel like it's too volatile, but I feel like it's a more predictable version of the volatility you would expect on the pound yen. So when we look at the pound Swiss, I mean, it's actually fairly predictable at the moment anyways. We're just moving downward in price and we're moving downward in the neural strength indicator. So that actually makes a whole lot of sense, right? Well, we've got something else to look at. We need to go look at our charts now. Let's go back to the charts and switch over to the pound Swiss. There it is, pound Swiss. Pound Swiss, sweet. Okay, on the pound Swiss, we have just started printing our little sell arrows right here, and we've blown past this trough. We closed at that trough, right there. We closed at the trough. We opened at that trough, and then we've dropped for the day. And the reason why this is interesting is because we really don't have anything else to look at except for a previous peak. Go figure, right? We have a previous peak, previous trough. We came down, closed at the trough, and then broke it. And we went down, and we were not able to close past this previous peak. So we got stuck in this little range right here, as you can see from this price. We got stuck in this range between this trough and this peak. Now, what does that actually mean? Well, considering we don't have any divergence at the moment, I'm not going to speculate about there being some divergence trying to set up at the moment, but we are trading within this range. So what we want to do is actually watch for a break above this trough or a break below this peak. If we break below this peak, we want to sell down to these previous peaks. If we break above this trough, then we want to sell back up to these peaks, which actually I mean these peaks right here, but that's where price is. And why do we want to sell back up, or why do we want to buy back up to these peaks? Well, because they happen to coincide with these troughs, and a lot of market hesitation along the way. So let me put the lines on there, that way we can all see what's going on. Oh yeah, wait, I know how to do this without having to, let's see, Alt-H. Oh yeah, it works on a Mac, sweet. Hadn't actually tried that yet. And this is the trading range itself. And then here would be the profit target for a sell. So if we sell from this line, make this red, down to this line. And if we buy, we're going to be buying from this line up to this line. Now, we're not going to buy on a touch of these lines. We're going to buy on a close beyond them. Because right now we're stuck in this range. We don't want to take a trade until we've actually broken out of this range. Now, if you want a little bit more conservative profit target for this buy side trade, then we can move it down to this trough instead of the market hesitation we saw over here and these troughs. We can move down to this little one right here. And that'll be a little bit more conservative, or we can even move it down even further, down to just below, between these two prices here. Whichever way you'd like to go. Buying would be from a close beyond 33.13. We would be buying up to 34.36. And selling, we'd be selling on a close beyond 32.51 down to 31.51. So we'd be looking for at least 100 pips. And we want to close either on this or beyond it. If we can close on this or beyond it in either direction, we'd be looking for a buy or sell in those directions. The really cool thing about where we're at right now with the pound Swiss in particular, there we go. Now we can get the view that we needed. The really cool thing about where we're at right now with the pound Swiss is that we've had this nice move upward and a nice move downward, and now we're kind of in limbo. We're in the middle of a downward move. So in this case, we can either, and this is going to sound really obvious, and I apologize for how stupid this is going to sound, but we can either continue our move down or we can turn around and go back up because we are stuck in limbo. And this is a limbo that we get stuck in occasionally with the pound Swiss. Ever since November of last year, I had a lot of fun trading the robots in November and December and January. Oh, and February too. February was a lot of fun with the handyman robot. The handyman robot made a lot of money in February. And then in March too. It took, the handyman robot was taking buy trades along this nice little upward swing up here. But anyways, us being in limbo right now, which is a fairly common limbo to be stuck in with the pound Swiss, means that we've got a nice size movement in one direction or the other. And maybe we'll talk a little bit more about that with Gordon when he's back on the show tomorrow. Tomorrow we are going to be featuring a segment. Well, it's only one time thing, but we're going to be talking about 5 trading myths that can wreck your account. And that's going to be cool because Gordon has been in this industry and been teaching and developing curriculums and helping trading experts, like bigger name people at bigger financial institutions. He's been helping people develop like trading systems and all that stuff for as long as I have. And I've been doing it on a smaller scale. He's been doing it on a much larger scale involving all asset classes. So what's cool about this 5 trading myths that will wreck your account is that Gordon actually brings a perspective in here other than just my little robotic trading perspective. I can tell you all day how trading robots can potentially ruin your account. And I can tell you all day about how trading robots can save your account. But Gordon can tell you all of the various things, and he's done this with me before. He's told me some of the things that, that people believe that go around as these trading myths that have worked their way up from wherever, like rumor and such, only to find out that they're just myth. Old wives' tales type of things. So this is going to be pretty cool tomorrow. So join us live for that. That's going to be pretty awesome. Now, I'm going to break for just a moment, and you're going to see a little video that I already set up, and then we're going to come back, and hopefully we'll take some calls and some text messages, and we'll look at a few additional things, and so we'll be right back after this very brief message. Hi, my name is Wes, and you want to know something that really irritates me probably more than anything else on the planet? When I get emails like this. Yeah, like this one. Rsi 300. In email terms, Rsi means reply, meaning you sent someone something and they reply to you. But in marketing terms, they do this as a gimmick because you didn't read the first email that they sent. There was an email that came from this particular person called 300 ... I didn't read it. I had no interest in it because it starts with 300 pips of profit coming on the pound dollar. You have no idea that 300 pips of profit are coming on the pound dollar. Second of all, details in this email. Remember, we have a free Forex chat group. Yes, free. Are you making money trading? Question mark. If not, keep reading. I did not read it the first time. I don't need a gimmick to try to get me to read it the second time it comes through. I really don't like this Rsi thing. And you know why? I hate it because when it comes through on my phone, like what you're seeing here, it actually makes me look at that screen for a moment. And I think, oh, someone replied, they got me again. You'll never see anything like this coming from us because if you don't want to read our emails, that's totally fine. I put a lot of time and energy and thought into those emails, but if you don't want to read it, then don't. That's totally fine. I'm not going to resend it to you under the pretext of replying to something that you sent me. That's just dumb. Have a great rest of your day, and thank you and goodbye for now.